All right, y'all. In this session, we are going to be talking about indicators. Now, indicators are that thing that is going to allow you to decide when and if to pull the trigger once price comes to your key level. So make sure to pay attention, make sure to like the video, make sure to subscribe to the channel, because we are giving you this 100% free trading course walking you through step by step exactly how to become a confident, profitable trader. And we got to give a major shout out to our sponsor, Antarctic Exchange, the best trading experience in the world. This is a decentralized exchange made by traders for traders. And what sets this apart is, first of all, this is a decentralized exchange, meaning 100% self-custody of all your assets. You're not depositing your money into another company's wallet or platform. You're keeping everything self-custody in your own cold wallet or hot wallet. And because you're doing that, that means it will never ever require KYC or know your customer. The best part about Antarctic Exchange is ownership. All traders on Antarctic will get a portion of the trading fees that the exchange makes. And there's also an opportunity for you, the trader, to be the market maker and provide liquidity to the exchange. And in return, you will receive a proportionate amount of the market maker profits, including liquidation fees. Now, this has never been done before. Instead of your typical centralized exchange where everybody's trading against the market maker, and let's be honest, the market makers are the one who always win in the end. We are fellow traders trading against fellow traders, providing liquidity to each other, and it evens the playing field. Now, if you sign up in the link in the pinned comment and description, you will get the lowest fees, period, on any exchange right now that I know of. 0% limit order fees, 0.01% market order fees. This is a great deal on fees. It makes scalping on low time frames absolutely amazing because you can market in, market out, and make big profits on small moves. So make sure right now to go sign up to Antarctic Exchange. Links are in the pinned comment and description. I'll see you over there. So as I was saying, indicators is going to be that final touch to your analysis that tells you whether or not to pull the trigger. When price comes down to a key level or up to a key level, if you're looking for a long or a short, how do you know whether to take a trade? Because there's a billion levels on a chart, but not every single one is going to give you the move that you're looking for. Well, I want you to take a look at this long trade I'm currently in right now over on Antarctic. This was a long trade setup given in advance in the Casper Crew VIP Discord. And as you can see, we had our level marked out on the chart, but we also had a series of confirmations, a series of signs that we were looking for on one of our indicators to determine whether or not to actually go ahead and pull the trigger. Now, of course, we did get all these confirmations, which allowed us to pull the trigger. So I'm going to be walking you through today different indicators that you can start using now to help you, when you come to a key level, determine whether or not to get into a trade with good risk management. Now, I'm not going to be able to go over a comprehensive list of indicators. That goes beyond the scope of this course. That would take a whole course in and of itself. But what I'm going to do is I'm going to give you the indicators that I feel personally give you the most bang for your buck, that are the most worth using, and show you how you can now use these indicators, some free, some paid, to then add on top of your analysis so that after you come to the chart and you make a plan, you can now determine if and when price comes to your level for that day or week. Do I take a trade here? Yes or no? If you're looking for a thriving trading community with pro traders to help you along on your trading journey, check out jasoncaspertrading.com to join the VIP Discord, the best trading community in the world, where myself and other instructors, although we do not give signals, we do walk you through our live trading every single day, multiple live streams a day, 3 or 4 live trading streams a day, where we're telling you exactly what we are looking for. And if we see a trade, we don't give signals, but we let you know what we are doing according to our analysis so that you can find confluence with your own trading analysis. Of course, inside you will find myself and other instructors, such as Thor, one of our great instructors, live streaming every day. Buoyant Man in one live stream. Dude took 4 scalp trades, absolutely crushed it. Of course, White Phoenix is in here as well, crushing it with his charts and his daily live streams. And of course, I'm in here too. We're trading Bitcoin, altcoins, stocks, Forex, commodities. You'll find it all in here, plus every single month. We do games where we give away thousands of dollars in cash prizes. And no matter what time of day it is, you will find conversations going on, people to help you, and our advanced TA channels where seasoned traders who have been vetted by the team are posting their analysis, their levels, and their ideas to help you on your trading journey. JasonCasperTrading.com to join the community. Links to this are in the pinned comment and description. Go ahead and click the link to join the best trading community in the world. Now, a quick caveat about indicators. When I first got into trading, and when a lot of people first get into trading, they're looking for this holy grail, this one indicator that's going to make them profitable. They're looking for this one buy or sell signal, or this one pattern they can look for, where every single time they can predict what the price is going to do. And I'm going to be the first to tell you, such an indicator does not exist. When it comes to trading, when it comes to predicting what the market is going to do, the number one priority is always going to be your analysis. The number one priority is going to be everything we've gone through up until this point. Your analysis, your identification of the key levels, and then taking the trades using the risk management. If you can get those two things down, the analysis and the risk management, this third thing now, the indicator, this is going to be your final edge. This is going to be the icing on the cake. I'm fully convinced that even if you don't have any indicators, you can be a break-even or even a profitable trader. In fact, I myself know traders personally, full-time traders, that don't use indicators. Now, I do use indicators, but I just want to stress the point that this is the final piece of the puzzle, the icing on the cake. This is now going to give you that edge where when price comes to a key level, this is now going to give you that final edge that tells you there's a really high chance it's going to go your way. All right, so there's two basic types of indicators that you need to be aware of. Number one are indicators like moving averages and things like this that they print on the actual candlesticks or over the candlesticks. You also find things like fractals or different buy and sell indicators, VWAPs, things of this nature that actually print on top of or alongside the candles. The second type of indicator is an oscillator, which goes underneath the price action, and it's separate from the candles. Now, for the scope of this video, we're going to be primarily focused on the oscillators. So here are a few of my favorite indicators. All right, so before I get into the oscillators and really getting into how I personally pull the trigger when looking for a trade, I do want to go over some indicators that print on the actual price action itself. I'm not going to go into depth on how to actually use these because there are billions of YouTube videos out there. Basically, I use simple moving averages. As can be seen right here, this is the 50-week simple moving average for Ethereum. I use exponential moving averages, also a good tool. Here's the 50-week exponential moving average. You can see this is what I call dynamic support and resistance, meaning it's not a fixed line on the chart. For example, $2,000 Ethereum, we just have this little zone here, is obviously a key level on the chart. Resistance, flip to support, support, resistance, resistance, support, 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 resistance, breakout, right? It's a fixed level. It's not going to move. This moving average will change depending on the past price action. And you can see it's pretty well respected here. You can see that as long as we're above it, obviously, very strong trend. And then we try to get a bounce, but then we lose it. And then we kind of struggle on it. And then whoop, we get a big move up, get a little bounce, come below, back test, fall. And currently we're finding resistance literally right at the 50-week exponential moving average. Now, mess around with these. If you want to add them into your trading as additional support or resistance levels, by all means, go for it. Something else I use is the daily VWAP and the weekly VWAP and even the monthly VWAP. The VWAPs are the volume weighted average price, which basically means they take the price and they mix it with volume. So it's basically a moving average that takes volume into account. Now, the green line is the weekly moving average. I'm sorry, the weekly VWAP. The white line is the daily VWAP. And these are very, very good lines to keep on your chart for trading, because you will see many times, especially with like the daily VWAP, if you're looking for a day trade, that the daily VWAP on a bearish day will be acting as resistance, like this day here. Every time we come back, we reject, we reject, we reject. Or if we're above the VWAP, it acts as support. We get to move up, bounce, support, right? It also means, like for that day, If you come above the VWAP, like we did here, and back test, this is showing you strength for that day. All right. Just like the green VWAP, if you break up and back test, that's showing you strength for that week. All right. I actually use these pretty much every day when it comes to looking for a day trade or confluence. I will be using these VWAPs. All right. Once again, look into this more on your own, but this is definitely a great tool. VWAP, I use way more than moving averages. Something else I use, dynamic support and resistance, is something called an anchored VWAP. An anchored VWAP means if you want to know what's the moving average, taking into account the volume from a fixed area on the chart, what you're going to do is you're going to come over here to projection tools, go to anchored VWAP, and let's say I just want to know from the low on Ethereum, what is the volume weighted average price? This is now going to give me the VWAP for an area of time, a chunk of time that I'm determining myself instead of just using the weekly VWAP, which is only going to give you the last week, or the daily VWAP, which is only going to give you the last day. You can see how powerful this is because look at how perfect support, perfect support, perfect support, perfect support, and now that we're above it, if we get a back test here, let's say we back test 2,250 and acts as support, what a great zone of confluence. What a great zone of confluence. These anchored VWAPs are great dynamic support resistance levels that you can use in local ranges, but more so I like to use them in local trends. So for example, we're in this uptrend from down here. All right, we're going to go back down to our 1 hour. I have the anchored VWAP from the low of this move on Ethereum, right? Let me just kind of adjust this so it's actually from the low. What this is doing now is giving me a very key area of support, and if I find confluence, like let's say for example I pull a fib from the low to the high, and I go ahead and put on our 618.65, you know, I could say, okay, we got the anchored VWAP, just below we have the Fibonacci golden pocket, and then I could mark out this as a key area of support, right? Now, again, this VWAP is going to get closer and closer to the price the longer the price stays here, because it's going to be moving. So let's say we do Bart Simpson pattern this and fall down. By that time, the anchored VWAP might be right around here, in which case we could be looking for maybe the 382 and the liquidity that we have just in this little zone for like some support, okay? It's a dynamic level of support and resistance, and it's very important, especially when you're dealing with a trend, like a big move up or a big move down. Now, that's pretty much the scope of the indicators I personally use where they print on the chart with the price action. Now, I want to talk about oscillators because these are really going to give you that edge that will allow you to determine whether or not to pull the trigger at a certain key level. All right, so let's start with an indicator called the Relative Strength Index, commonly called the RSI. Come to indicators and just type in RSI. And go ahead and click on the Relative Strength Index, all right? This is the Relative Strength Index, which basically means it's showing you how strong is the current move right now for whatever asset you're looking at. And as you can see, it's basically going to be around the 50 level is considered to be pretty much neutral, right? You can see the RSI will make it big here. There's these dotted lines. In fact, let me go ahead and make these dotted lines different colors so that we can see them better. We'll make it green here. This green line, this is going to be considered neutral. Now, when I say 50, you can look over here and see there's a scale where it basically is going from 0 all the way up to, you know, forever. And 50 is considered neutral, right? It's right in the middle. The strength is not very strong, nor is it very weak. When you come above 70, this yellow dotted line, this is now considered two things. Number one, it's considered very strong. When RSIs are high, you say there's a lot of strength in the move. However, when the RSIs get very high, they can only go up so much before they have to come down. So once you start to see this RSI kind of shade green, this is telling you that the price is overbought. meaning it's probably overextended. The price is probably above a fair value, and there needs to be a correction to the downside soon. Now, on the other side of that Bitcoin, when we come below 30, this is considered oversold, or the price is overextended to the downside. In other words, the price is lower than what it should be, and although the strength is very weak, it's only a matter of time before the sellers get exhausted and we get a move back up. All right. Now we can see how this kind of plays out the price action. When the RSI gets very low, this is when we start to change the direction here. And once the RSI gets very high, this is where we start to get some resist. I mean, right now we're finding resistance here. It's a very bullish scenario, but this is the time where we would look for price to come down. All right. And I just want to make it very clear that the RSI is telling you relative strength. The reason why I'm hitting this point is because a lot of people look at the RSI as like, when it comes up here, it's time to short, and when it comes down here, it's time to long. And yes, you're correct. But at the other side, on the other end of this, when it comes up here, this is showing you a strong trend, right? When it comes down here, it's showing you a strong trend to the downside. And so what we're going to be using these oscillators for is, as we're coming to our key levels of support or resistance, we're going to be looking at the oscillators, asking ourselves, are they telling us that a top is very likely because things are overbought and the price is higher than it should be? And maybe we could be looking for a short at resistance. Or, on the contrary, is it telling us to look for a long because it's telling us price is oversold, the price is lower than it should be, and we should be looking for a long from key support? Now, this is just generally what oscillators are going to look like. The RSI is the most basic oscillator. I personally don't use this. I'm going to show you some of my favorite indicators. I'm going to start with my favorite free indicator, which is called the Awesome Oscillator, the AO. All right. Go into indicators, type AO, put on your Awesome Oscillator. Now, the Awesome Oscillator, what this thing does is it has a zero line. All right. You can see the scale for the Awesome Oscillator is going to be, it's going to start at 0 right around here. And then it goes up to these high levels, and then it comes down to these low levels. You can see the numbers get negative and positive, and instead of being at 50, like the RSI is all positive numbers, this has a 0 line, and then below and above. All right. Now, the thing I like about the Awesome Oscillator is when it starts to form a top, it will actually switch color for you to let you know that the momentum has shifted from bullish to bearish. So we understand when the oscillator starts to get pretty high, right? It's a sign that the trend is very strong. But the Awesome Oscillator now is going to change color on this histogram to show us, okay, yeah, the trend is strong, but it's losing bullish momentum right here. In fact, maybe we should be looking for a little bit of a consolidation or maybe even a top. All right. And if we take a look at what happened here, we can see that, yeah, once it started to turn red for the next 12 hours, we basically traded sideways. And then once it turns green again, we continue to move to the upside. Once it turns red, we consolidate, come down a little bit. Once it turns green again, we come up more, right? This is very helpful because this allows us to, unlike the RSI where there's no definitive, all right, there's a switch here. This is giving you an actual switch with the color change. The same is true down below where, once we turn from the red to the green, as soon as we switch, we start to get that move to the upside. Something else I want to point out about this Awesome Oscillator that has the 0 line is look at how when it crosses that 0 line, it's a very strong indication of continuation in that direction. All right. When we get the cross on this histogram where this green gets closer and closer and then finally flips over the 0 line, look at how, boom, we get that big move to the upside. And then when we flip the 0 line, look at this, boom, that begins the big move to the downside. Then we get this flip right over here, boom, this begins the big move to the upside. All right, we get this flip right here. And look, even in a very bullish environment, which we have been in at the making of this video, we still end up with a 5% move to the downside once that histogram switches from bearish to bullish. I'm sorry, from bullish to bearish by crossing the zero line. Now, one thing I want to make very clear, when you're looking at these indicators, it's very easy, especially if you're just a beginner, to look at this and say, oh, it's so easy. You just long when it flips the zero line and short when it flips the zero line. Well, that works great until you end up somewhere like this, or somewhere like this, where you're flip-flopping all over the place, or somewhere like this, right? And then you start to realize, because when you first look at this, your eyes will filter those out and say, man, what a great indicator. Well, the truth is, yeah, it can be great if used in confluence with your analysis. But if you're not using your analysis and you don't have any kind of reference point as to what is considered a support or a resistance, it's very easy to get chopped up. All right, this is why I say the indicator is the final piece of the puzzle, the icing on the cake, because we shouldn't even be looking at an oscillator until we are at one of our planned trade setups to begin with. And 99% of the time, when you are at a key level of support or resistance, your oscillator is also not going to be in a place where it's chopping around. All right, chopping around usually means price is not at a level of support or resistance, and so idiot traders are just getting wrecked trying to long short every little 1 minute candle. All right, most of the time when you are looking for your trade from your level, the oscillator is going to be giving you a top signal or a bottom signal. All right, now this is my favorite free oscillator, the awesome oscillator. Now I'm going to get into my favorite paid oscillator.
So there's a billion oscillators out there, and you can mess around with different ones. But I want to talk about the one I personally use. It's called Market Cipher. Now, it is a paid indicator, and like I said, I'm not here to tell you that there's this one indicator that's going to immediately make you profitable. But the reason why I trade with Market Cipher, and I've been doing so since 2020, is because it takes many, many different indications that would take you a lot of different tools to see at one time, and it puts it into a very easy to read oscillator. You can see here it actually contains two RSIs, this yellow kind of volume weighted oscillator, this blue and purple money flow, and these momentum waves all together. And in my opinion, having been trading since 2018, this is by far the most accurate indicator that you can use in TradingView. Now, that being said, it doesn't mean that you need to have Market Cipher in order to trade the way I trade. But for me personally, I love Market Cipher. I trust Market Cipher, and I'm used to Market Cipher. So for me, I feel like blind without this indicator here. So now I kind of want to talk about Market Cipher a little bit to show you how I am using this in order to make decisions as pertains to the market. Now, Market Cipher has many different aspects to it. First of all, it has these momentum waves, and I'm just going to basically turn everything off now except for these momentum waves here. And one thing I guess I forgot to mention is you can customize any indicator by clicking on this gear button, and basically there's little check boxes and things like this pretty much for every indicator, and you can customize the colors and customize pretty much everything about it, all the different settings. But first of all, we have these momentum waves, which you can see right here. And if we compare these to the awesome oscillator, we can see that they're pretty much the exact same, right? They're very, very similar in the sense that they're printing kind of like, well, Market Cipher will give you that red dot before the awesome oscillator switches red. A lot of times Market Cipher will give you the signal before the awesome oscillator, but the point is, it's the shape that we're really going to be looking at here. This is why I say my favorite free indicator is awesome oscillator. So these momentum waves are very similar to this stuff you're going to see on awesome oscillator. But then Market Cipher has something called the VWAP. It's not really a VWAP, but what it is it's an oscillator based on volume, and it really shows you the power of the market and which way the money is going. Very, very powerful indicator to be used alongside with these momentum waves. And what's cool about this is it's also showing you tops and bottoms in the volume that's coming in, right? So it will show you when the volume is starting to curve down and come out, or when it's crossing that zero line, which gives you a really powerful indication. Something else I love about Market Cipher is this stuff called the money flow. The money flow is one of the most powerful indicators, I think, in the world when it comes to trading on TradingView. This money flow is so powerful, and I'm going to go over how exactly I use it. This is what's known as a leading indicator, okay? The money flow is the leading indicator. This is telling you what is going to happen before it happens. And this is really, when you combine this money flow with those momentum waves and that yellow oscillator, man, you got yourself a really, really good set of confirmations to be looking for big moves. The next thing that I really like about Market Cipher is these RSIs. These RSIs, they're two, and they don't really have a zero line, right? So it's a little bit different than the standard RSI here. But basically, these RSIs are powerful in the sense that they can also give you a very powerful indication of a big reversal in the market, like a big bottom or a big top when used in confluence with the other indicators. So basically, you've got about 4 things in one on this oscillator. And in my opinion, based on my own trading experience, the information that you can get from Market Cipher, just by looking at this one indicator here on the chart, very simply, like from your phone outside, instead of being at a computer looking at all these different crazy, like people are looking at like these intensive like order flow tick charts with like all this information you have to intake and like calculate in your head. It's just showing you the most basic, looking like the Teletubbies up in here, blue and purple, indicator that gives you such strong, powerful signals. Now, over the years, I have created a lot of content on my YouTube channel that goes over how I trade with Market Cipher. And what I'm going to do now is I'm basically going to re-upload this into a session so that you guys can get a really firm grasp on how I use this indicator to actually decide whether or not to pull the trigger. Now, here's the thing. The information I'm going to share with you about Market Cipher, for the most part, can be used with any other oscillator. The principle remains the same. The thing that sets Market Cipher apart, in my opinion, is the fact that it will give you much more accurate signals. So again, this is a paid indicator. I am affiliated with Market Cipher. I'm not going to tell you to click my link in the description. I'm not even going to put my link in the description, because honestly, I would use this indicator whether or not I was getting paid 15% per sale. I would use it no matter what. I used it before I had a YouTube channel. I will use it after I have a YouTube channel. So let that be what it is as per this free course. And the reason why I'm showing you other indicators here like the awesome oscillator is because I want you to know that, yeah, I use Market Cipher. This is how I trade, but the principles that I'm going to share with you are universal, and they'll work with the RSI, they'll work with the awesome oscillator, or pretty much any other indicator you can use, like the wave trend, I think. Yeah, wave trend crosses. Right, very, very similar stuff here. Zero line, overbought, oversold, green and red dots, okay? There's a lot of indicators that you can apply these principles to. But I'm going to walk you through the way I personally trade, all right? So I'll see you guys in the next session. Peace.